Planning Group, joins me now to talk about what he calls the Fed's PCE Mirage and the coming liquidity trap. So, David, there's a lot to talk about today. Let's talk about the newest breaking news that just happened out of the Oval Office. Inflation cooled down, paychecks grew almost 3 times what was expected, and the trade deficit significantly shrunk. The president played a CNBC clip about this in the Oval Office just moments ago on Elon Musk's last day as the head of Doge. His government contract has ended. Let's get that straight, because not everybody is reporting it that way. So, David, do you think Musk actually indirectly helped with any of this?
Well, absolutely. I mean, what Elon Musk represents is one of the smartest people in the world, right? So he legitimized the platform as we were going into those final days before the election, and everyone was telling you that, Trump doesn't have good ideas, but then Musk shows up and he starts saying, actually, here's some really good ideas that I've given him, and he's even taken them. And so, Doge isn't a meme. It's a metaphor for hope in free markets. I mean, as a taxpayer who pays a pretty considerable amount of taxes, I hate to see waste, and we know that waste has been happening all over the place. So I think Musk exposed fraud. He cut through the fog, and he's now showing us what's real. And so I think that we owe this guy, a tip of our hat, and ultimately, he's moved us into a much better position. Like, just even think about it. If you're in your own personal budget and you're running out of money, what's the first thing you need to do? You need to start cutting back. What an amazing idea. But this is a patriot who's come in and said, hey, I think there's some better ways of doing this. I think we can modernize the United States government. And I mean, holy smokes, the fact that we found out that there's like handwritten Social Security things that are going down to some mine. What an antiquated old school system. We need better ideas. And I think that, he inspired some people in that way.
Yeah, no doubt. Doge didn't obviously target inflation directly, but cut government waste, and that eased inflationary pressure overall.
Absolutely.
But, I explain this to us, because inflation, tariffs went up, they're in play. Inflation went down. Consumers are still spending. Those things seem to be at odds with each other, right? How do you explain that?
Tariffs went up, inflation went down. I don't know, maybe Washington finally got something right. These are new ideas and ways of looking at things. I don't think that the traditional indicators that we've looked at for CPI, which I regularly refer to as CPI, by the way, because it has nothing to do with the average person's actual expenses. But those numbers right now are looking really amazing. And so we've seen some adjustments here, and ultimately we're seeing numbers that are far better than how other nations are faring around the world. I mean, let's just even say Argentina has 43% inflation right now, year over year rate of change. We're looking at 2. That's literally the Fed's target. And so, we're primed right now, even though we're talking about more inflation. So actually, if you look at trueflation from when Trump took office to where we are today, we're still down 0.81 of 1%. And so that is actually an improvement from where we were, even though things have been coming up here in the short term. So I'm actually, trying to make heads and tails of some of this stuff myself, just because, people are out there spending money. But here's the one thing I want to mention. People are spending more money. Blue collar probably got a little bit of a bump right now. That's what we're seeing. Plus, we knew that there were going to be big pay increases based upon those union contracts, that were negotiated a few years back. But together, we see a different direction that's taking place. And this is more than just like, printing hope. This is something that you can actually build with. This is actually innovation and investing in parts of our economy. I think they're going to do really well. If the average family's not doing great financially, but they can get no tax on tips, no tax on overtime, that's really going to benefit those that are going to roll up their sleeves at a time when they really need to. And so I don't think that this is America collapsing. This is America rebuilding, being reset. And I think that some of these things had to happen. And this direction is ultimately going to bring some pretty exciting times, but potentially some pretty scary times too, just because the rate of change ultimately has challenges as well.
You also say that the Fed's facing a debt crisis, a liquidity trap, and a shaky Treasury market. Help us unpack those 3 issues.
Okay, so the Treasury market is incredibly important to be paying attention to. Why? Because when the rates on Treasuries go higher, by the way, if you owned bonds, there's a seesaw effect that happens. And so when those rates go higher, your value of what you owned is worth less because your bonds were paying a lower amount to what the new ones are right now. It's called net present value. Bonds can lose money in 5 different ways. And so that's a really big deal. But right now, our nation is spending somewhere around $3 billion a day on our interest payments on those treasuries. So if you don't know this, or the viewers don't know this, the taxpayer is actually the one that's making those payments. And so that's a really high rate of payment. Now, historically, it's not that high. It's just high relative to the economy that we have right now. Ultimately, I think what's going to happen here is that, the Fed is one of these damned if you do, damned if you don't moments. They've put themselves in this hard place. But guess what? The data dependency should tell them, hey, we're at a place right now that they can cut, that we should be off to the races, that things do look right. And so my hope here is that that we can see really good economic outcomes that are going to bring us into alignment and get those rates down, because the rate of debt versus equity premium and the values that we're going to be making in the markets as things go off to the races here again, you're going to see debt come down. People are going to start buying more. And ultimately, I think that we're going to find ourselves here in a unique time. But remember, you got to have your anchors in place before, crazy moments kind of show up right now. And so if we're not able to harden up our balance sheets today, meaning understanding gold, silver, Bitcoin, some of the different tokenized ideas that are coming out, in-ground assets, and how new treasuries are going to be coming out here with stable coins. There's a lot of innovation today that is just taking place. And I just want to make people aware that the rate of change right now is pretty consistent. And if we're not staying up on it, we might have outdated ideas as we're moving forward here into the future.
All right, David, before I let you go, the strong economic indicators today were touted at the White House, but might this put pressure on Powell to cut rates sooner than expected?
Well, I think he should be cutting rates. We were looking at 6 right now that were supposed to be happening this year. And so he's kind of playing some politics. Pressure is certainly on him with Trump. And I'll just say this, there's no way that the United States government can actually keep our rates up this high. We have $9.6 trillion that is coming due within the next 12 months because we were at record lows 5 years ago. Every good CFO ratcheted up as much debt as possible. Those hens are coming home to roost here. And what's going to occur is you either have to, pay that debt off, no one has the cash, or you need to remetabolize it with new payments. But it's going to cost you so much more with 3, 4, 5% higher rates of cost in borrowing. So unless we can go longer on the duration, unless they can get those rates down, unless there's some creative ways on the back end, or maybe some new M2 cash into the system, we're going to find ourselves in trouble. And so I think that Trump's going to get it done. He's going to get Powell to move, but it's going to happen faster than I think that we're expecting. But it's potentially going to come with a crisis, and that's going to be the catalyst to sending in the cavalry.
All right. David Stryzewski, CEO of Sound Planning Group, thank you for your time today, as always.
Appreciate you, Lisa. Thank you.